What's up, crypto gang? Welcome back to another episode. If you guys are new here, we do a giveaway at the beginning of every single episode, and today's winner is DJ Nice. Thanks so much for commenting on the previous video, DJ Nice. I just sent you some Bitcoin. On this special episode, I go through a quick analysis of the top crypto-backed loan platforms. Quick disclaimer, this video is not sponsored by any of these projects. I'm just very interested in this space and I'm participating in multiple of these platforms. So if you guys are brand new to the channel, in a previous life, about 5 years ago, I started a company that was about peer-to-peer lending. It was called LendLayer. We were raising money from investors and providing loans to students to go through coding boot camps. This was considered peer-to-peer lending because we were facilitating the money from a peer that was an investor to the peer that was a student going through these coding boot camps. This was once upon a time in 2014 when the trend was taking off with peer-to-peer lending. Platforms are popping up, loan originators are popping up. It was crazy. So we grew that business over 14 months and got acquired by the co-founder of PayPal, Max Levchin, and his new company, Affirm. It was a wild ride. Needless to say, I learned a ton from that entire experience. And at that whole time, I was working on, learning about cryptocurrency, getting involved in the Bitcoin community, on Bitcoin Talk, the forum, and everything. And what I realized was that when people are providing loans, there is this really large archaic system because banks effectively want to lend as much money as humanly possible because they make a lot of money doing so. That is the number one vehicle in which they are getting money from consumers through interest. And I thought that peer-to-peer lending was a great way for me to learn every aspect of the lending industry. So fast forwarding to today, we are going to be talking about the crypto-backed collateralized loan space. Now, if you guys heard that and just thought it was just completely made up, basically a collateralized loan means that you have an asset you are pulling some sort of equity out of. So in traditional finance, for example, with a home that you purchased, you could take out a loan or a line of credit, like a HELOC, off of the equity from that home, and you could use it to purchase, let's say, another home, like a rental property. Some brilliant entrepreneurs have stepped into the cryptocurrency space and said, all right, if there's millions of people that have this asset that is Bitcoin, Litecoin, Ethereum, and so on, why don't we allow them to borrow against it? So today I'm going to be going over the top 4 platforms that are getting involved in the collateralized crypto loan space. We're going to be talking about Crypto.com. We're going to be talking about Blockfi. We're going to be talking about Celsius Network. And we're also going to be talking about Salt Lending. Unfortunately, the word lending in cryptocurrency has got quite a bad taste in everybody's mouth because of all of the scams that happened in 2017 and 2018. A couple things before I dive into this. There is a concept called loan to value, or LTV. For example, if you wanted to take out a $50,000 loan in US dollars, you would have to put up 10 Bitcoin at the 10,000 a Bitcoin price right now, and then you would be able to pull out value of 50% of those 10 Bitcoin. You have the overall value being $100,000, and then the loan to value that you're able to take out is that 50,000. So 100,000 at 10 Bitcoin, and you're only able to take out 50,000, which would be 5 Bitcoin worth in US dollars. Now, a lot of you may be wondering, why would someone do that? And the reality is if it's just sitting in a hardware wallet or on an account or wherever you're holding your crypto, you are able to free up that US dollars without having a taxable event. Now, if you are watching this video and you have cashed out crypto in the past for US dollars, that is a taxable event via an exchange like your Coinbase. So what these collateralized crypto loans are doing is they're allowing you to get that US dollars but not have it be a taxable event. And you are able to pay back over the course of 12 months. You can refinance at the end of 12 months and continuously pay each month. And they also have different ways of paying towards interest, as well as interest and principal payments each month. Let's say you're taking out a $25,000 loan. You're probably going to be paying between $200 and $250 a month towards that principal and interest. Collateralized. I'm going to be looking down at my laptop here to get the right statistics right for you guys. The first one we have is Blockfi, and their crypto interest account that you can send your Bitcoin or your Ethereum or your GUSD, which is the Gemini dollar. You can send it there and you can get 8.6% annually. With the crypto-backed loans, as I said before, they are going to be offering 50% of the loan to value. So if you want to take out $50,000, you're going to have to put 10 Bitcoin in at $10,000 per coin, and you're going to have to take out the 50 grand out of $100,000 worth of Bitcoin for that 50% loan to value. Now, on average, Blockfi is saying a 4.5% interest rate. This will obviously change. There's a lot of mechanisms that people can pull. So a lot of smart money is already involved in this because you're dealing with 4.5% interest rates, you're dealing with 50% loan to value ratios, and people are taking out substantially large loans to free up that US dollar amount that they have locked in that asset. And eventually they will be getting that asset back after they put it into another asset like another, let's say, rental property. And on the crypto-backed loans for Blockfi, we're looking at a 12-month duration. But this is to be taken with a grain of salt because at the end of 12 months, you can refinance that loan and continuously pay. But the important part is that they are doing it in increments of 12 months, and you'll have a balloon payment at the end of that 12 months. So you're going to have to refi, or you could pay off the entire thing and get your Bitcoin back. Now, the next one I've been a fan of for a long time, and it is Cryptocom. They have offerings that range from earning interest, where you can park your money on there in cryptocurrency, and they also have credit, which is rolling out where you have the ability to put your cryptocurrency on there and take out about a 50% loan to value ratio, around that range. So for example, if I wanted $4,000, I would put $10,000 on the platform in cryptocurrency, and I could take that out in the form of credit. The magical part about Crypto.com is that they actually have a physical card. I don't know if you guys are gonna be able to see this because it is green, it's the jade green card, but I'm a big fan of this because the form factor alone is going to help people just get used to using it, and everywhere that Visa is available, you're able to use this card. So allowing people to put this in their wallets, use it around the town, they're going to be more familiarized with actually topping this up with Bitcoin, and now you can pull a credit line out. So a really cool thing that Crypto.com is doing in addition to this is they are allowing people a discount when you stake their token. So it goes down from 12% to 8% in interest when you are staking their token, which is a powerful incentive to get people to stake their token, to get them that whole 4% off in interest. So it's on your mobile device. You can instantly send crypto to your wallet, and you can pretty much instantly pull out a crypto loan in the form of credit. Obviously, there's no credit check required because we are talking about collateralized loans here. So it's instant credit available. You put up the collateral and you're good to go. You can spend directly from your mobile device, which is very powerful. That being said, the next one up is Celsius. I actually got a chance to meet them when I was in Las Vegas last year for World Cryptocom. Fantastic guys, and they are working on a mobile first approach where you are able to put your cryptocurrency on there and earn rewards, as well as staking their cryptocurrency and earning rewards from that as well. So when it comes to Celsius Network, for their loan value, it's looking like their monthly interest payment is $105 with an annual interest rate of 4.95%. And the loan value for a $33,000 loan is looking like about $190 in interest per month that you pay at 6.95%. And this is an example for 100,000 worth of Bitcoin as you're taking out that value from the 100,000 in Bitcoin. And once again, this is not doing credit checks because we're dealing with collateralized loans here. So you're providing the collateral and you're pulling out value from that asset. There is going to be an option for stable coins or cash, so you can move it out into a stable place. You don't have to necessarily cash it out if you want to interact online. Many people are just doing this in USD to move it into a traditional asset like real estate. And similar to the other platforms, they are giving 10% interest when you park your money on the platform. So when you move your cryptocurrency there, whether it's ETH, Litecoin, or Bitcoin, or whatever it may be, and you park it there, you can earn up to 10% APR. So to put this in perspective, really high yield CDs and savings accounts are offering like 2.5% if you can find them and you qualify for them. That's 5 times less than what these platforms are offering. Just to throw that out there, that is an astronomical difference between the return that you would get just from parking your money in these accounts. Because it's important to know that a lot of these companies operate under AUM, which stands for assets under management. When you have a higher number there, you are worth more money and you have more assurance that you can take care if anything happens. Quick footnote there is that Celsius is actually insured up to $100 million by Lloyd's Insurance because they're using BitGo wallets. Last but not least, we have Salt Lending. I got a chance to see these guys in Miami when they had a booth there, and they're claiming they're the original crypto-backed loan, and they're starting with $5,000 loans. The interest rates are 5.95%. And the terms are from 3 months to 12 months. Like I said before, you can refinance at the end of that 12 months because if you don't want to pay that balloon payment at the end, you can refinance and extend it out. The interesting thing about Salt Lending that others are not doing is they offer 70% loan to value. And they're doing a $0 origination fee, just like the other platforms, as well as zero repayment fees. And that is a very important metric there because if you want to repay really quickly and you want to get your Bitcoin back, you should be able to do that because this is a collateralized loan here. It's your asset and you are putting it up for a loan to not be a taxable event. And it's important to know that you need to be able to get it back if you want it back. And I know that this is counterparty risks with all of these, but at the same time, if your money's just sitting there, I know that it is a very intelligent thing to hodl, but at the same time, if you want to put that money to work and diversify out, which I highly recommend people do if they're investing at a young age, diversifying out, evening out your portfolio across multiple industries is a very, very important thing, especially non-correlated industries, because if something happens, like let's say a massive recession right on the horizon, you want to be diversified out to protect yourself. The margin call. That is what the number one question that I've been getting is what happens if Bitcoin goes down? So what a margin call is that if Bitcoin goes down to $7,000 from $10,000 when you took that loan out, then what would happen is they would give you a call literally or shoot you a text and say, hey, the value of your overall loan dipped below our margin call. We need to liquidate some of the asset to make up for these losses, or you need to send us more Bitcoin to make up for these losses. The simplest way to look at it is that if Bitcoin's price goes down, which it does very often from 10,000 to let's say 7,000 or 6,000, you're gonna have to put more money in there in Bitcoin in order for them not to liquidate some of the asset that's already in the platform if it dips below that price. Now, all different platforms have different concepts there with margin calls, but it's important for you to know, do your own research. I'm gonna be putting all the links below so you guys can do your own research on these, and just be careful. This is very powerful when you have the ability to take out collateralized loans and move it into different assets, but just know that you are giving up the ownership of that asset. And one of the things that we've talked about many times before, not your keys, not your coins. So if you do want to move into a different asset and you can afford to, lose those coins, I would just go forward with that. Same with all investing, is only invest what you can afford to lose. Don't take out second mortgages on your home to take out these loans. Don't do things like that. That is, don't listen to crazy people on the internet yelling at you, telling you what you do. It's just not a good idea. That is it for my overview of these 4 projects. As I said before, Blockfi, Crypto.com, Salt Lending, and Celsius are my top picks for the collateralized crypto loans. I'm super excited about this space. And if you guys like this video, slap a like and don't forget to subscribe for more of this content. And I will see you guys on the next episode of Hack Crypto.